Hey traders, welcome to the end of day recap at Tribeca Trade Group. This is Christian Fromhertz, and man, what a day for the markets! Record highs across the board. U.S. indices, just huge move. SPY was up 1.4%. Diamonds right about the same. Qs up 1.1%. And mid caps and small caps, really nice outperformance there, up 1.8%, quite different than the performance yesterday. And that, so, just listening to CNBC and Fast Money, those guys talking about, oh, the State of the Union, what they said, I think they have it a little bit wrong here. I think there's other things that were going on here in the market. So, not to say that we need a reason for everything, and you can just basically watch price action, and that kind of tells you the story. But the first things first, before we even went into the State of the Union address, markets were already up. S&P futures were already up. Why were they up? Because if you look at, I think I have to pull this to 228, but China data was very strong last night. The non-manufacturing PMI was at 54.2. The manufacturing PMI, again, these PMI and ISM are more leading indicators versus GDP, which is a lagging indicator. But 51 per 6. So as soon as this number came out, futures started to rally, and it was not the State of the Union address didn't even start yet. So that was positive. And then when we came in the morning, you looked at what was going on in Europe. This has nothing to do with the State of the Union address. This is a global rally, and got a couple questions about this being, hey, this is too extreme of a movement right now in the U.S. and I do agree. I think we are way overbought using the relative strength index, which I've been quoting for the last couple of weeks. We've been overbought now for the last couple of weeks, but when you come in and you look at Euro stocks up well over 2% on the day, and the DAX up 2%, and you come in the morning and you see futures are up like 40 basis points, you're going to have a good day when this happens. And so it's not just what's going on in the US. There's a big rally that's going on globally. So don't be nearsighted in terms of just looking at the US and looking at Apple and so forth. There's a bigger rally that's going on here. Just because CNBC, for whatever reason, doesn't like to talk about it or doesn't like to see what's going on, the forest for the trees, I would say. But when you see this going on, and this is kind of like we saw in the beginning of last week too, when U.S. markets were closed for President's Day, the international markets did wonderful. And when we got in on Tuesday morning, you could kind of tell Tuesday was going to be a nice day last Tuesday because it was it was a similar type of reaction here, international markets. They weren't up quite this much, but you know, this was the indication that today that something good was going to happen. And then after the market opened, once we were open for a half hour, then the ISM data that came out. I mean, look at this data that's coming out here: 57.7 versus 56 in the ISM manufacturing. Really strong. 50 is expansionary. We haven't had these numbers. You can actually go back and graph it. It's been a little while, but we're on the high of kind of where the market's been running. So this is a monthly number, but we're back to the 2014's high. So these are all really strong things going on in the marketplace. The fact that the market is really the economy is picking up. Again, the number from the GDP number is a lagging indicator that was yesterday. These are the numbers that are important, leading indicators that are showing some really nice strength. So the only thing I would say, on the flip side, which we've been talking about this a little bit as well, it looks like a rate hike is almost fully priced in for March. So we're looking at an expectation of now 80%. From a week ago, it was 30%. So it does look like a rate hike is being, the market thinks that it's going to happen in March. So maybe that causes a little bit of a pause in the rally. If it does, maybe it's going to be a nice a nice place to kind of add some longs. But so it is what it is. We're overbought really heavily on the RSI. It doesn't get much more overbought than this. It's an 85 RSI. So just be cognizant of that. I would think we're going to back and fill here a little bit, but I've been wrong. I thought we would come in a little bit further to the 20 period exponential moving average. It didn't happen. The market doesn't want it to happen. So you could tell as well today, market breadth, all strong, everything participating. When we see this in dark green, you know that we're going to have a pretty decent day. It's very hard for the market to reverse. Also, just kind of adding to the catalyst today, first of the month. A lot of times, funds put money to work the first of the month. So I wouldn't be surprised if we come in a little bit tomorrow, but again, we'll kind of have to see. And you're going to have to analyze things on a case by case situation with stocks, which is what we're seeing. I've been talking about that in the last few recaps. Is you have to analyze these names on a case by case situation. So I did actually take a couple longs today, even though I don't normally like to do that when we're up so much today. But I'll talk about which ones I took today. And some longer dated trades too. I think that's important in this market too. Sometimes we do end up going sideways for a little while, so you want to make sure that you're giving your trades a little bit of especially if you're an option trader. Unless you're just looking for a 1 day move in front month. I mean, I normally go much further out, just because it's very difficult to tell what the market is going to do on a day-to-day basis. So most of my trades will be going out further than March, unless I'm looking for some kind of real big bang for the buck in trading a weekly or something like that. But so next, I wanted to talk about just IWM small caps. I did not put on a trade in small caps today. I wanted to see where they closed, but you go back to this chart. This looks a lot different than the S&P and the Qs. So I like how this closed today, and I'm going to be looking for either a pair trade, maybe long IWM in short SPY or something of that nature. At the very least, a call spread in IWM. There was a some real nice calls going up, which kind of uh, seemed very interesting to me, or notable to me, that I don't know exactly why, but they're going out to March 31st. So I won't be using this particular expiration. I'll probably go out a little bit further than March 31st. But a lot of call buying in the IWM ETF. Again, a good sign, and kind of what I'm looking for is for that next leg higher in small caps, which we certainly haven't seen. We basically have been moving sideways since December. So here's where I'm kind of setting up camp, I think, for a long in the indices. Also in the ETF space, if you look at the Fez ETF, this is Euro Stoxx. We just talked about how well Europe is doing. Real nice longer dated position. This is a block of 4,000 January 40 calls going out. So, you can look at these charts. You could look at Euro Stoxx, and you can kind of see as well what the chart has been doing here. And you want to draw back and look at a 5-year chart and say, hey, there could be some nice upside ahead for Europe. Not even close to the all-time highs. If you go back and zoom in and look at the last year, a nice bounce from the 50-day moving average. So we just broke out a resistance here. So Europe looks very interesting right now. A couple of trades that I took, we saw some Western Digital calls a couple times here in the last couple days. You start to think about this move in Apple, and which names is Apple going to bring with it? What names does Apple kind of partner with? Make some of the Apple iPhone parts with Apple. There's actually some, June of 2018 200 strike calls that traded today. So somebody looking for a lot more upside. I think I have the trade here. Yeah, June 2018 calls going up in Apple. My goodness, 200 strike. I can't believe it. I don't think I've ever seen 200 strike Apple calls before, but at least prior to the split that they had. So you have to think about what names Apple's going to bring up. Broadcom had really good earnings after the close. You can see Broadcom, even though it's on the highs, moved up to 223 here. So Western Digital, another name I think kind of in that wheelhouse. So I actually made this into a call spread. So we actually did this in terms of a April 80-90 call spread in Western Digital, and limiting the amount of premium by using a call spread. A couple other names that really kind of caught my attention today. TXT, this is more of a defense name. I've played this name before in options. It worked really well. I think this is when the options came in here. So nice block in TXT. The other thing which is in a perfect world, this is how you want to play right now in this market too. Is I should have this on the list. If I don't have it on the list, look at that. I don't have it on the list, do I? I don't have it on the list. I think we saw them yesterday. Is that right? Or no, that's not right. That's another day. But TXT, for whatever reason, I do not have on my list. Let me just bring this up this way. So block of 5,000 options went up here in TXT right here, and I was able to put this trade on for about $2 and take a good portion of it off at the end of the day at 255. So that's perfect, right? I mean, you're trading, you're using what you're seeing in the day. You're using aggressive call activity and taking profits, taking the majority of the trade off, and then leaving a small piece on. So that's another way that you can kind of handle risk in this market. If you think that we are going to get a pullback, establish these trades in the beginning of the day. Look for a name that has this aggressive call activity that's going to run, and then you don't have to sit with the trade overnight. This one I decided to sit with like the last 20%, 15, 20% of the trade, and kept that one on. So that was one that I went home with. Another one that I went home with was Ross Stores. We've been seeing this a couple times now. A couple names, kind of I would say quality names that had a good quarter of earnings, but they guided a little bit weaker. This was one that we saw several times going on. Not call buying, but repetitive aggressive call buying going out in April. They kind of picked their spots here and started buying around like $1.50, $1.60. That's the April 67.5. So I thought buying a quality name that takes a big dip on earnings, that's worked out a couple places. We've also seen this in HPE after earnings, and this is starting to work now. Hit a nice target. My average cost basis on these April calls is 33 cents. Hit a target today at 45 cents, but it's starting to retrace and is now in the earnings gap here. So that was one name. Let me see if I can go back. I just wanted to cover a couple more names where we saw aggressive call buying. Not that I wanted to show that name, but haven't seen call buying in that name in a long time. RYN, double A, Alcoa. Just you could see the list is just really a lot of names today. Look at this name, Fred. I did not take this name because I already went into Ross Stores and I just didn't want to get long another name that's in retail. But look at this name, Fred. Just a huge amount of calls that went up. Now, this name does report earnings, I believe, in a couple weeks, but 25,000 April contracts. Some went up on the bid side, a lot went up on the ask. They report on 322, so that is in a couple weeks. But again, quite a bit of opening trade. I don't think I've seen a trade like that before. I think this is Fred Stores, I believe. So interesting that call buying taking place. A couple other names that we saw in the beginning of the day. AMBC, another name that had earnings. Dip buyer comes into that name. Apple, we already talked about. There was a nice hefty Facebook activity today. We talked about the ETF flow as well. So that's basically it. You could see all these different signals. There's a lot of them, a lot of aggressive signals. A lot of banks outperformed very nicely again today. We've been seeing repetitive call buying in some of the banks. We had big Morgan Stanley weekly call trade 2 days ago, I believe it was. Also some calls in Citi, a little bit of calls in Bank of America as well. So can't really do this video without talking about the strength in the financials as well. Obviously helped by the move in bonds today, which were down 1.7% today. So that's it for today's video, and have a great Wednesday evening. You can find us at tribecatradegroup.com. We still have a special half off the first month. Take a look at what we're doing in our room. We just actually started our new March trading contest. This is something where everybody picks a stock for the month, and the winner gets a free month of the trading room. So I do give away cash prizes like that. I reimburse you your membership fee if you win for the month. My pick for the month is FCX, Freeport McMoran, and I like this chart. I've been really paying attention to the option activity that's been going on here. So it made a nice turn here yesterday after about 6 or 7 days. You got some support here, also supported the 200-day moving average. Next area to kind of watch for resistance is going to be 1451. If we can get over that, possibly we can get back into this range up here. But that's my pick for the month. So thank you for watching tonight's video, and have a great night. Thanks.